Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to look at a bunch of different ratios. We're going to look at ETF versus ETF and see which ratios are looking the best, how they're moving against each other. It doesn't mean that one asset and its assets are moving into another. It's just which one's outperforming, which one's cheap on a historical basis. And some of these things you can kind of see a trend develop where something gets very cheap and it looks very good to go long in. Other ones, you might want to rotate a little bit of money out, overexpose something else that's very cheap. And some of these are moving very well against each other, which means we could see an outperformance of one asset versus another. And when you have a lot of one asset and it appreciates against the other assets, you can swap that asset by a cheap one, have it appreciate against all the other ones. And that's basically the quickest way to build wealth, is doing this ratio game and buying things that are cheap, buying them, holding on, having them appreciate against other assets, and then swapping them to others. So this is something that I use to make, I'll say, considerations of potential sectors to be buying in. And I am actively deploying this type of approach and strategy on the Finding-Value website. And then I look at the companies that are down within the sector, look at their fractals, and then get some of these ones that just do some crazy, ridiculous stuff to the upside. We'll call it highly leveraged to the move of that sector. So think of it as companies that have a lot of debt or companies that are small caps, something on the lines of that. So let's dive in here. Let's take a look and see what's going on with these ETFs, and I'll give you my financial opinion. So we've got URNM to XLE. XLE is an ETF for the oil and gas exploration production companies. URNM is uranium ETF. And as you can see, we're kind of squeezing up here and we're starting to break to the upside. Now, my opinions are uranium looks like it's ready to go. I mean, that's what I'll say. But we are breaking. We could see a big revaluation of uranium against some of these oil and gas companies. Now, does that mean that I just sell all my oil and gas? No, that's not what it means to me. I'm still going to keep my select, we'll say high torque oil and gas plays, but I will be looking at uranium and some of those plays and looking at their fractals and the charts and the companies if we could see an outperformance of URNM, and I'm going to add new money into it. So I still stay diversified. I still hold what I think are the best companies of all the sectors, but I'll be adding more money and new money into some of these other ones. And if the opportunity is good enough, maybe I'll sell a little bit off the top, skim a little bit to create a little bit larger position in the ones that I think look incredibly good. So URNM looks like it wants to outperform XLE. We've got URNM versus natural gas. Now, natural gas has basically been crashing down. And people get scared, like, oh, why is it crashing? Oh, my goodness. But look how cheap natural gas is right now. It is way up there. Natural gas in relationship to crude oil is also very cheap. So in my opinion, whenever you get these large moves like this, where it's just going ballistic like that, you don't want to jump in front of this train. What you want to do is you want to wait and see when it stops and consolidates, kind of like this consolidation there, where it kind of slows down and consolidates. That's what I think will happen. And then I think we'll come back down. So I think natural gas is actually in the future going to be something that we should definitely be watching. And there's going to be investment opportunities all over natural gas at some point when this momentum slows down and starts to turn. Looking at URNM versus XOP. XOP is another oil and natural gas exploration production company. So if you look at this, we can kind of draw something through here. That's broken out. And we're at a pretty low level down here. So this makes sense that it could go up and move on up and beat XOP. And I don't think XOP is necessarily going to go down. I think they're going to go up together. But URNM could do some crazy stuff here. That's what I'm thinking. URNM versus platinum. We can see platinum kind of pulled back here recently and URNM's gone up. So this has definitely gone up for the ratio. I still like platinum. Platinum is a different type of investment. Platinum's kind of the lowest risk way you can play a commodity market if you're buying physical platinum. And URNM is more of a leveraged uranium play. So I know they're not exactly the same, but URNM does look like it could outperform platinum. URNM versus NDQ, that's right up at the top. And you can also see that we've got the lows coming up. So we could see a big breakout potentially in this ratio, favorable for URNM. URNM versus the CRB index. Now, the index is not a leveraged product. Usually mining companies are. But what I see here is massively bullish for uranium. this looks like it's going to rocket higher. What this is actually showing us, and URNM kind of overpowered the CRB index here, but this is a Livermore accumulation cylinder that we're seeing, and this is like the best time to buy it is in this little side over here. Still a good thing. It's starting to take off, but yeah, it looks really good. URNM versus OIH. Now, I consider both of these to be powerhouses right now. Both these sectors are very, very good. You can see that they're holding, OIH is holding its own against URNM, and that's a tough feat because URNM it's a banshee when it gets going. I'll just say that. It's very volatile. But right now it's holding its own and just kind of moving sideways. URNM versus REMX. Again, these two have been just going back and forth. There's no real pattern here. So I think REMX might be one to look at too, because URNM and REMX are pretty much equally matched. URNM versus COPX. COPX has been outperforming, and we're at this kind of midway point. Could this pull down, or is this going to bounce higher? I don't necessarily know that answer, but if I were to take a guess in looking at URNM's chart, I would say URNM's probably going to make some headway against copper and moved back to the upside. That's my guess. Switching gears to XOP. XOP has been losing ground against REMX. We've had a pullback in, especially natural gas. Natural gas has been tugging that sector down, and it'll do all right. We've broken to the downside, so REMX might be a better, more favorable investment in the short term. XOB versus MU. Now, XOP broke out against MU. This is still a very low ratio for XOP, and this is kind of like the average up here, somewhere in there. We're way below it, so I'm still favorable XOP, but in the short term, we are getting a pullback. How long and how deep will this pullback be, I think depends on natural gas and when that will finally bottom out and start to turn. I do think oil is going to head higher. XOP versus OIH. Now, OIH has been in ridiculously cheap land up here, guys. This is ridiculous, and it's still in ridiculously cheap area. A lot of the times this can, come back and do a return move before heading lower. So the ratio is still cheap. OIH is energy service companies, and I still favor energy service companies at this time. XOP versus GDX. I would say we're still kind of cheap on XOP side. We're not super expensive. So I think XOP still looks all right, especially down here. This was like the time to buy it, right at that tip there. Right there is like the perfect time and that breakout, which was September, October of 2020. And that's when I bought a whole bunch of exploration production companies. XOP versus crude oil itself, it still has some room to move to the upside. It is still undervalued. And XOP versus copper is still very cheap for XOP. So looking at XOP, which is the oil and natural gas production companies, it doesn't look that bad. As bad as, we went through all these charts. Yeah, it's pulling back in the short term, but it's still cheap on a ratio perspective against a lot of different assets. Looking at OIH is the energy service companies against MU. This looks incredibly cheap for OIH, and it's moving in a positive direction to the upside. So we could see an outperformance of the energy service companies over agribusiness. MU is agribusiness. OIH versus REMX, which is rare earth metals. We had a downtrend line break. We were very cheap here in 2021, and this is starting to move higher. So I think energy service companies, from a ratio perspective, is definitely cheap. I know REMX has been moving, and we've broken out in REMX, but we've also broken out in OIH. So I think the energy service companies are favorable, in my opinion, based off the valuation of the ratio. GDX versus gold itself. So these are the gold and silver mining companies versus gold. This still looks very cheap for gold and silver mining companies. And the one thing I look at is you get a downward move, you get a basing move, and then usually what comes next is an upward move. This is at a very cheap level. We've got the basing pattern. Now it's a question of just when. When is this going to break out? When is it going to head higher? And if you're super patient, you could probably take positions in some of your favorite companies, and eventually it will come. And I think it will. I don't think it's going to be a long wait either. I think it will come sooner than what most people think. GDX versus REMX. This is favorable for GDX. So GDX is actually looking very good down here. I'm talking very, very good. In fact, it looks so good it makes me want to buy it right now in some of my gold and silver mutual funds. What this is it's your 1, 2, 3, 4, 5, 6, and then 7, and this is the same Livermore accumulation cylinder. And we should be accumulating GDX at this time over REMX. And then what you usually see is a vast outperformance to come back to the top here. So that's what we see in GDX versus rare earth metals. GDX versus SILJ. SILJ is cheap, meaning that the silver junior companies are cheaper than GDX. So if you were to do we'll just do it, REMX divided by SILJ, which I don't have, but if we were to do that, what this is screaming, it's a double bottom too there, look at that, nice. But this doesn't work like that, it's a ratio. It's signaling that SILJ is really cheap, and that, SILJ is expensive down here, SILJ is cheap up here. So right now, it was cheap in August of 2022, and it's starting to make its way lower. It doesn't mean it will be straight lower. We can have things that go up and down. But SILJ is cheap against REMX, rare earth metals. This is COPX versus the energy service companies, OIH's energy service. This still looks favorable for a move lower. It doesn't mean it goes straight lower, but I still think we've got room to compress this to the downside where energy service companies will outperform copper. Then we've got COPX versus GDX. What's on top right now is GDX. Gold is very cheap, and we could see a move lower. Remember, you're going to have to be patient. GDX is really just kind of scraping sideways for a while, but it is cheap against copper. Now, looking at TAN, TAN is a beast. TAN's looking really good right now, and this right here is more or less overpowering GDX. So you get the double bottom, you get the potential sideways move, and then the break higher. So TAN is so volatile that it overpowers GDX's chart completely. TAN versus XOP, I also think there's going to be an outperformance of TAN, potentially. There's your double bottom here, the pause, and then the rip higher, and this here is your return move. The fractal here in TAN is absolutely massive, and I do have a small position in TAN. TAN versus TAN is the solar companies, solar renewable companies. This is TAN versus COPX. It's kind of just fairly valued in the middle. We've got TAN versus URNM. Now, this is going to be an interesting lineup here. Now, when I look at this, this is cheap for TAN, and actually TAN looks pretty good here. So I don't know if TAN's going to do some crazy stuff or what. This does look like it's trying to line it up for a move on up, which means TAN could outperform URNM, and that would be hard for me to believe. But maybe the governments are lining up solar projects or something like that for outperformance. And then we've got TAN versus OIH. So this isn't a big flag pattern. There's the double bottom breakout here. It's coming on down. So TAN is overpowering OIH. TAN is actually, it's got a lot of juice to the squeeze. I'll just say that. Very volatile, and if this can break to the upside, we can see a big move out of TAN. And then TAN versus REMX, again, it's overpowering it to some degree, but it's kind of fairly valued. And then TAN versus MU, I would say that by looking at the chart, it's basically lining up for a breakout to the upside for TAN to outperform. So TAN could be another one that might look good for potential investment. So when looking at all this stuff and looking at all the different ETFs, there's a couple things that I would say that I would take away from here. URNM does look really good. And, TAN might be one that I haven't really talked about, solar companies. You might want to get a little bit of exposure there. And again, this isn't advice. I'm just kind of talking to myself about how I would look at it. TAN might be exposure to get for myself because of just how powerful it is. OIH is still incredibly cheap against a whole bunch of different things. I bet you there's some really good companies and energy service companies to be looking for. I think there's some good ones in TAN probably as well. I've shared some of those on my finding-value.com website. They're very speculative, highly volatile, but maybe they push the needle in the right direction, so to speak. But yeah, that's what we've got today. GDX also looks very cheap in SILJ. They also look very good, very cheap against a lot of different assets. The assets that I would say, they don't look enticing to me right now. Copper, MOO, which is the agribusiness ETF, that doesn't look that enticing to me. And let me think what else. I think those are the two that I would say, those don't look as enticing. And rare earth metals, it has its positives against some of the other assets. I'm kind of neutral on that one as well. But it doesn't look horrible, but it doesn't stand out as a clear winner. So that's what I've got for today, guys. Hopefully you guys enjoyed it. Give me a thumbs up on the content, subscribe to the channel, and subscribe to the website if you guys like. If you need any help, we've got a 7 a.m. Mountain Standard Time Saturday for a Platinum members question and answer session. And if you want to join, use the word discount in the coupon code. Get yourself a discount. All right, guys, we'll catch you later. This is Finding Value.